Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello and welcome to the Security Tokens Show. I'm your host, Herwig, and I'm joined by my co-host, Kyle Sonlin. We've got an exciting show lined up for you today. We've got the latest industry news, the newest security tokens, all the trading activity, and a great main topic, I think, music, the industry, and how NFTs and security tokens are going to disrupt it. But first, we of course have to thank our sponsor for making this show possible, and that's none other than Mizanti. It's actually doing a security token offering right now on the Royalties platform. They've got a short clip for you to check out. Thank you to Mizanti for being an amazing sponsor, and we have a great episode 119 to kick off, starting with our top 5 highlights of the week. Article 1 coming from MoonPay. MoonPay has raised $555 million at a $3.4 billion Series A.
This is no joke.
250 partners, over $1 billion in payments processed through crypto and NFT payments. They work with platforms all around the world to help deal with all that plumbing, and they have an HQ here in Miami. This is amazing stuff.
Oof, gotta love it, Kyle. And speaking of having an HQ in Miami, number 2, Borderless Capital, also with an HQ in Miami, announcing a second fund, Algo Fund 2, $500 million. That's even more than their previous $200 million fund, which had already invested in over 100 companies. This is big news because it's all focused once again on Algorand, obviously. And this is big news for the NFT creators and the DeFi projects out there because that is their focus moving forward.
And moving into article number 3, we've got Republic. You may remember Republic because they're one of the largest crowdfunding portals here in the US. They also did the Republic Note, a security token where they sold shares in a fund that owned a bunch of the equities that had raised money on their platform previously. And now they're back at it again, acquiring Cedar, which is the leading crowdfunding portal in Europe. So they're scaling outside of the United States and into the global marketplace. This is an unbelievable move for them to really reach scale across the world.
Big moves, big expansion, $100 million deal. Looks like Republic's trying to be the biggest crowdfunding portal in the world now. And moving on to number 4, JPX, the operators of the Tokyo Stock Exchange over in Japan. Major stock exchange, one of the largest players in the traditional financial ecosystem, but they have now acknowledged that blockchain and distributed ledger technology are the future. They recognize the changing tides, and they are now going to focus on that, which joins a huge wave of companies over in Japan, all focused on creating a security token industry.
Amazing. And number 5, to close out today, we have an interesting interview between former SEC Chair Jay Clayton and current SEC Chair Gary Gensler. And so at the Digital Asset Compliance and Market Integrity Summit, Jay Clayton sat down and interviewed Gensler talking about crypto regulation. And for one of the first times in our political climate here recently, they actually both tended to agree on how these things should be policed, both coming to the conclusion that yes, it seems like there were a lot of crypto companies that used their crypto sales in order to fundraise for their business, which looks and smells a whole lot like a security. Again, nothing wrong with that, but you got to admit it, you got to embrace it, and you got to take the steps to rectify it.
Yeah, no, that was a fascinating conversation. Gotta love my guy, Jay. He, in fact, once said that all stocks one day may be tokenized. And, both of them recognize that a lot of the, funds raised through cryptocurrency projects are ultimately used by entrepreneurs to create these projects. And they say that as a time-tested case of what might trigger a security. So definitely very interesting. I think, Kyle, that we might probably not see too much more changes here in the upcoming framework for crypto. I think we're just going to see a whole lot more enforcement.
And with that, let's get to Jessica for the rest of the industry news.
I'm Jessica Burns, and I'm back with this week's industry updates. Executive of 8 major cryptocurrency firms have been called to testify before a U.S. Congressional Committee on the 8th of December. Witnesses called to appear include Coinbase, Circle, and Bitfury. It will be the first time companies representing the controversial sector have been questioned in this way. U.S. politicians across the political spectrum have been called for more scrutiny of cryptocurrencies. Elizabeth Warren on the left of the Democratic Party has called for tougher regulations of the sector, where Donald Trump has described cryptocurrencies as a scam. Countries around the world have taken radically different approaches to cryptocurrencies. The hearing before the U.S. Financial Services Committee will focus on the challenges and benefits of financial innovation. According to the committee announcement, Exodus cryptocurrency wallet users are now able to bet on sports and esports teams from around the globe on the Polygon blockchain. The leading non-custodial cryptocurrency software platform today announced its wholly owned subsidiary, Proper Trust AG, entered an agreement with SportsX, the online sports and crypto betting platform. Exodus wallet users in approved jurisdictions may now access the services offered by SportsX and place bets on a range of worldwide sports and esports in the cryptocurrency. By using the Polygon blockchain, smart contract transactions are secured and payouts are made on time, and all transaction fees are covered by the platform. Imagine if the London Stock Exchange or Euroclear said that they were going to include NFTs among the assets that they trade and settle. Well, that is just one of the things Switzerland's now up and running crypto trading venue, SIX Digital Exchange, SDX, is contemplating, after a seemingly interminable wait for licenses from the Swiss Financial Market Supervisory Authority. The convergence between the new cryptocurrency world and the traditional finance is illustrated in the SDX, whose parent company is SIX Group, the operator of the Swiss National Stock Exchange. The floodgates are now open, and it seems a sieg into NFTs is a natural progression for SDX, whose plan was always to tokenize non-traditional assets like real estate and art, in addition to existing financial products. There is rich data in private assets, and Invenium and security tokens now have access to actionable rich data. The total global spend on financial data alone was $32.3 billion in 2020, rising nearly 6% given the demand for better pricing and portfolio management tools among COVID-19 atmosphere. But why is the 6% increase important? Because the COVID-19 period created such a guessing game when it came to the valuation and transparency of certain assets, namely real estate and private funds. 2 data providers, both driven by blockchain technology, stand to benefit heavily from this eye-opening period: Invenium and Security Token Market. Head over to our website to learn more about how STM and Invenium are providing the foundation for the digitalization of private markets. And back in our STM offices, our own Peter Gaffney releases his newest edition of Tokenize This, where he talks about tokenizing industrial fishing. Everything needs funding, whether a venture gets its funding from traditional sources like venture funds, banks, or niche lenders, or new age alternatives like security token offerings. The funding must be there, plain and simple. That's all I've got for you today. And now let's go over to John to get our latest STO and market updates.
Thanks for the market updates, Jessica. They're always so refreshing. So welcome back, tokenizers. I'm John Pittman. Hope you guys didn't miss as much over the holidays, but your token boy is back with the weekly STO updates. So to get started, we have Royalties, a new digital asset marketplace back in our update queue again with yet another STO on their platform. A couple of weeks ago, it was the Mazzanti Italian hypercar STO that launched with Royalties. This week, I'm going to talk about MOAC blockchain launching an offering through the very same marketplace. But on a quick side note, if you're looking for some additional homework, then you should browse our YouTube channel where you'll find an interview out right now where Security Token Market's very own Jonah and Megan interview the CEOs of Royalties, Mazzanti, and MOAC. Great interview. Take some time out, check it out. So MOAC is a tech-based company in China with a service network of multi-chain smart contracts and peer-to-peer services that help to build and scale decentralized apps. They've been doing so since around 2015 and in the process have acquired 220 DeFi applications and 3 million users since its development. The goal of MOAC technology is to become the underlying primary protocol technology that helps to provide the global value of the internet. Now, the marketplace Royalties will be issuing the equity-based security tokens for MOAC, and the minimum investment is going to start off at $1,000 with a targeted raise of $7.5 million US. Next up, we have Restart Energy launching a security token offering for acquiring renewable assets. Restart Energy is a Romanian company that provides electricity and natural gas to over 50,000 residential and around 5,000 commercial customers in Romania and Serbia. They have a holding company that they've just established in Switzerland, and it's called a REIT. REIT is going to stand for Restart Energy Innovative Technologies. The company's strategy with REIT is to invest and support energy technology projects. They do so with a goal to give individuals and other companies the flexibility to access and partake in a more sustainable energy environment that isn't constrained by all the institutional red tape or antiquated business practices. So the funds raised from this SEO will be used for a few purposes. One of those which is acquiring functional renewable assets. Another is funding a downstream energy supply business of theirs. They also look to leverage blockchain technology to provide an end-to-end tokenized carbon offset system, as well as a carbon marketplace for businesses and for people. The Restart Energy STO will be initiated on the Swiss platform Dara and will be using the highly popular Ethereum blockchain. Right now, the goal is for the raise is $8.5 million US. So good luck to those guys because it's extremely exciting when I see companies building their business models that take into consideration environmental and sustainability. And to finish up, let's go ahead and give you an update on what's happening here at Security Token Market. For those that may not know, we're based here in Miami, and last week was crazy as we had the very famous Art Basel Art Festival taking over the city. And taking over that festival were creators of all walks showcasing how they're integrating NFTs into their work. With that in mind, I've been noticing a trend of people who are simply turned off by NFTs. So in my last token blog, I discussed multiple use cases for NFTs and the type of people who could benefit from them. And I will say, it's not the group of people you would expect. So check that one out. Stay tuned for new blog drops every Thursday. And of course, I can't finish without an update on our crowdfunding campaign right here at STM. We're still allowing those that want to invest a chance to reserve a spot. And as of now, we have 700 pledges for over $4 million. So let's build as much hype as possible and make sure you reserve your spot if you haven't already. That wraps it up for me. Here's Keith with your market updates. I will see you guys next week on the other side of the blockchain.
Welcome back to another weekly secondary market trading segment. As always, all news and pricing data is sourced from stomarket.com. For our American listeners, I hope you all enjoyed your time with friends and family for Thanksgiving. Today, the total security token market cap is at $1.14 billion. We had some pretty intense volatility among the top security tokens by market cap, but overall, the market is only slightly positive. The total market cap is up 3.6% from $1.1 billion last time around, as the total market cap slowly creeps up in the positive direction. We have the biggest gainer this week, and that was MPS, Mount Pelerin's token. It exploded in price. The token is currently trading at $11.77 from around $7.94 the week prior. That's a gain of 48% in price with a slight decline in weekly trading volume. The Exodus token also experienced some volatility over the recent holiday. The token is back up to $24.75 from its dip down to $16.80 last week. It's an increase of 47%, and volume is also creeping its way back to the upside as it posted 322,000 in weekly trading volume. This rebound is coming on the back of the announcement of the wallet provider's partnership with esports betting company SportX, one of the first of its kind. With Spice VC, it's making some noise this week. At the time of recording, the token is trading at $4 from $2.85 last week, an increase of about 40% in price. The Science token is actually down this week. It's actually the biggest loser. The token is trading at $1.25 at the time of recording, 34% down from $1.90 last week. We also have T-Zero's token taking a short ride to the downside this week as the token trades at around $3.65 from $4.10 last week.
It's a decline of just under 11% in price as weekly trading volume paints a very similar picture. We have the INX token. It's down just over 20% this week as the token trades at $2 from $2.55 last week. The token has struggled to maintain any sort of consistency in pricing over the past few weeks. It's up and down and up and down. Regardless though, the token maintains its number 2 position in the total security token market cap. And actually, it's only second to OSTKO, which has remained rather stagnant in both price and volume this week. Moving over into our weekly section on tokenized stocks, we have Grayscale and the Bitcoin Trust, the tokenized shares declining significantly in trading volumes since before the Thanksgiving holiday. Weekly trading volumes slumped all the way down to 18.4 million from over $45 million on the last show. It's a decline of over 59%, aligning with the increased volatility of the price of Bitcoin this past week. Perhaps institutional investors are staying away from GPTC while volatility is high, as it makes it more difficult to decide when to enter and exit positions, considering the fees and tax liabilities involved with making such decisions. Tesla and Alibaba tokenized shares both declined significantly in volume this week compared to the last time around. For these tokenized shares, weekly trading volume decreased 60% and 11% respectively. With that said, it's been a fun week in the markets, and as always, do your own research and hit me up on Twitter at KeithDLT to send me all your hot takes. See you next week.
Wakey wakey, welcome to Inside the Metaverse with your host, Eve Van Call. We go over the top breaking news relating to the Metaverse weekly. I like to start off with the number 106 because this magical number represents $106 million worth of Metaverse land being sold within the past few weeks. And that's according to DAB Radar. I wish I had a bell to ring, but I don't. So bing bong. The Sandbox is coming in first with $86.5 million. Decentraland second with $15.5 million, while Crypto Voxels comes in at a cool third, generating $2.6 million. By the way, all these Metaverse projects are built on the Ethereum blockchain. And on to the next one we go. Square rebrands to Block as its focus shifts to blockchain, saying that their vision for Block references the neighborhood blocks where they find their sellers, a blockchain, block parties full of music, obstacles to overcome, a section of code, building blocks, and of course, the Tuscan cubes. Just say it, Square, you are now a Metaverse company. You don't have to hide it. Saying they may have been working to make this change for over a year, and it only represents a change of their official corporate name and not their purpose, their vision, their structure, or how they operate. Next, you've heard of play-to-earn video games gaining traction and digital wearables popping up from brands. Now, we are embarking on what may be where to earn. NFTs are targeting the billion-dollar fashion industry in a different way by allowing brands to compensate customers for wearing pieces by giving them access to exclusive items or airdropping fashion pieces to their virtual wallets, or by even paying them in form of a fungible token. And last but not least, we've heard of athletes getting partnerships with Adidas, but that's old school. We are in 2021 and the meta is so real. And Adidas enters the metaverse with NFT partnerships. Bored Ape YC, G Money NFTs, and Punks Comics all getting these acclaimed partnerships. It's time to enter a world of limitless possibilities. That was Inside the Metaverse with your host, Eve Van Cole.
Thank you, Eves, for that wonderful Into the Metaverse segment. And with that, I think we can get to our main topic for this episode 119, Kyle. It's always so crazy how many we've done. And I think this one's actually a really fascinating topic, the music industry, NFTs, and security tokens. But before we can get to that fascinating topic, we of course have to do our companies of the week. This is where Kyle and we decide to choose one company each that we decide to spotlight in order to, bring attention to what they they've done in the previous week. So Kyle, who do you have for this episode?
For this episode, we have an issuance platform, Toquidity. They are an end-to-end turnkey issuance platform for issuing security tokens and digital securities. They're offering fundraise assistance, compliance, as well as the tokenization and issuance of those securities. And they have completed their seed round. They raised from the Global Blockchain Ventures Fund, who has been active investing in many different companies in this space around the world. They're industry agnostic, and they're looking to come forward in a big way. So I just wanted to shout them out. Another player coming into the market, new, fresh blood. It's amazing stuff. Shout out to Toquidity for bringing in some new steam.
Always big to see another new player on the block. So that's good stuff, Toquidity. For me, actually, I'm proud to say that it's Borderless Capital. I had to say it. We actually know quite a bunch of folks over there on that team, and they're doing great work. But specifically, they also launched a Miami-specific focused fund. And so on top of now raising $500 million, having their HQ out of Miami, I really just want to put a spotlight on this incredible fund with this actually rather unique structure, because Algorand, the foundation and the organization behind the actual blockchain, is actually an LP in Borderless Capital, but it itself is its own venture capital fund operated in its own way, yet still focused, of course, on Algorand. So I think that's an incredibly interesting structure, and they've obviously done extremely successfully and well with their previous fund, which is why they now just raised another $500 million. So congratulations to Borderless Capital. You're my company of the week.
Absolutely right. Borderless, amazing stuff. We love they're focused on Miami, and it's great to see more blockchain adoption. But moving into our main topic this week, we're talking music and NFTs, as well as security tokens, and how all these things may play together. So I think maybe I'll start off by just talking about how NFTs have played a role in the music industry, and we can talk about where it's going next. How does that sound?
Tell the folks what they need to know, Kyle.
All right, so we all know concerts, artists, you like to support your favorite creators, and one of the best ways to do that has always been merch sales. We've seen merch being a successful way of selling clothing or hats or any kind of opportunity to sell the branding of the company or artist or whoever you want to support. And in this way, NFTs have translated very well in terms of having that community membership, in terms of having something that is scarce or is limited time only, or something to signify you were there at a specific time and were able to participate in that community. We've seen it taken over all over the place by artists as well, ones that have created physical art, that want to create a certificate of authenticity for the art that they're creating, or potentially even something that could redeem in the future for art or things like that. So we've seen all kinds of examples of NFTs representing kind of this certificate of, yes, you owned it, but I think that we can really take it to the next level, right?
Yeah, I think, when it comes to a lot of people, NFTs kind of draw the line for them at kind of just digital art, when in fact it is way beyond that. In fact, we've already seen use cases of artists releasing NFTs that give you specific access to unreleased songs that no one else around the world can access unless they have that very token in itself, giving value to the user and a whole new experience to relate to the artist, but also an investment, something could be resold and someone else might want to buy because they also want to listen to that song. So I think just that alone is a great use case, but you can add an upgrade to that. I think the idea that you can own the entire rights to a song, right? Something known as the masters, right? The original version. This is a big deal. The idea that you could actually tokenize this and own a right to this using an actual ability to enforce anyone who uses this music, whether it's a movie or whether it's a company using this for their gain, they owe you something for using that song, and you would have the rights to that. And last but not least, Kyle, I think we've got the good old use case of royalties, where you got a situation of someone's got an actual investment right to the song, giving them a stream of payments every time that the song is used. And in this case, you might actually be able to expose other investors to those royalties using a token, enabling artists a whole new way to fundraise and get their careers off the ground.
I think those are three great solutions. Maybe we can take a second and unpack each one. So when we're talking about access, you start to think that potentially that's maybe not a security as much as it is kind of that membership club or something along those lines. Maybe upgrading. We saw it maybe with like the Wu-Tang album where it sold that specific copy that only the owner could then listen to, right? That's more access. That's not actually an investment into that asset. Whereas, as you mentioned, with a masters, for example, you are actually owning the rights to those songs. This is revolutionary when you think about it, right? When you think about how these days you could go viral on TikTok or viral on YouTube or something like that, where it may not be directly funded by a record label. It may not be funded by any corporation, but instead it's just someone being creative and building a very organic fan base because of those things. And now, instead of having to take that fan base and then sell it all away to one of a few different record labels who will give you the record, deal you're looking for, some of that cash, but essentially take all of the rights away from you, like we've seen with Kanye, Taylor Swift, and many others. Now, potentially the crowd is the one that can enable that opportunity to make some cash while not quite having to give up as much or getting screwed over by the large corporations.
That's a big deal for artists, especially as technology providers like Spotify and other platforms also start to encroach on these opportunities. And of course, the record labels have had a big grip in this industry. So the fact is, and this is the classic case of security tokens and really blockchain, is to remove a lot of these middlemen and disintermediate these traditional markets. And I think you've made a good point. Let's make sure we have a good understanding of what is an NFT and what might be a security token. When it comes to the situation of right to, the ability to listen to a song, let's just look at it like IP. Just like digital art, it's an image. You've now just got an audio file and you've got access to it. And that therefore doesn't necessarily make it an investment contract. But to your point, Kyle, now that you've got something that actually has significant value because of the initial demand for the economic opportunity behind it, right? The way you can monetize it, now you're starting to trigger along the lines of, okay, this is something that might have a return on my investment, and therefore the SEC might consider it a regulated product. And what's worse is if you decide to go ahead and fractionalize, so getting out of that NFT world where only just one owner, but now there's multiple owners, that's where things really start to get hairy, because the SEC might consider fractionalization another trigger for the fact that it's a security token.
So let's talk about investments, right? So we've got the access, we get that. That's just kind of like, selling an NFT or whatever. There's no compliance required there. There's not a lot of issues with actually getting access to a song.
Right.
But then you have two different types of investments. We talked about one, which is the masters. That's almost like if you think about investing in a startup or an early stage company, where you may not immediately get a significant return on that, but potentially over the long term, you could have a significant value that's created by owning Kanye West's masters from the first album and then having it go all the way through. But in the same way, you could also have a shorter term investment opportunity like royalties, where every time that song gets played or every time that song is licensed for a commercial or for anything, you as a token holder would get a piece or a cut of that. That's a cash flowing instrument as opposed to kind of a more equity style instrument. Both would have different types of investors, may have a different price and attached to it because of the differences in how those assets make somebody money. But I think in both cases, they would be securities, which means you need to take the proper precautions to do it. You can't just sell that to anybody willy-nilly and think that that's okay.
And that's where artists really need to focus, let's be real, and let's be clear. All of this is happening right now. Artists are selling access to music, they are selling their rights, and they are selling royalties. In fact, Blau, a well-known DJ, has actually launched a platform called Royal, backed by Andreessen and many other major backers, to go ahead and launch tokens for exactly this purpose. So we can expect that the music industry is about to see a whole lot of change, won't we, Kyle?
This is fantastic. I think that the music industry is poised for disruption in this front because of the fact that all of the capital has been so concentrated in just a few different record labels and different companies, and that they actually end up owning a ton of the other smaller, more indie seeming labels, that there's just so much concentration in that capital where these artists are the trendsetters. They're the ones that have the following. They could unlock the power of crowdfunding in a huge way. And I think that we're just on the cusp of what that could mean. So NFTs have done an awesome job of, I think, opening that door a little bit, but security tokens are really where the opportunity is.
And I'm most excited also for us, not just the artists, right? This is a new opportunity for all of us to not only support artists that we know through new ways and also get a return for participating facilitating and helping them along. But also, this is a new investment opportunity most people never got access to. Record labels aren't easily available to invest in, and most artists don't have their rights to be able to expose to multiple other people. So this is a great new opportunity. And with that, Kyle, I think that can wrap up our show. Hopefully you learned something about the music industry and how NFTs and security tokens are going to absolutely disrupt that world. And of course, if you have questions, feedback, suggestions, please reach out to Kyle or I. We are available on LinkedIn, on Twitter. We always love to answer any questions. And please make sure you catch us next Monday. And of course, follow us on all our social media and check out stomarket.com for the latest trading news, information, and everything else security tokens.
Make sure you sign up for the STM crowdfund. We're in the Testing the Waters campaign. Over $4 million in commitments or pledges so far.
Wow.
Nobody can commit any money
Love
yet, but they've pledged, and we love to see all the support. So that will be launching very, very soon. And so amazing things are coming. So thank you everyone for watching. We'll talk to you next week.
Happy tokenizing.